that's why I think Bitcoin is ultimately ascended, ultimately will be a bigger asset than even gold, which will remain bigger than silver because it's better on those core monetary statistics or characteristics. From a short-term perspective, I don't know, silver is more exposed to economic trends than gold and Bitcoin. I'm more worried about economic growth than I am about rising interest in fiat hedges. Therefore, I'd lean more towards gold and specifically towards Bitcoin. But look, I think all of those hard assets, I think the tide is rising on all of them. I think investors are fed up with what's going on in fiat currency. You see a bid for gold, silver, Bitcoin, other metals. I think that is a rising tide across the board.
Matt Hougan reminds us that the true story lies underneath the cacophony of market turbulence. Although investors may become distracted by short-term price fluctuations, the fundamentals are still sound. Data indicates that genuine liquidity is increasing throughout cryptocurrency markets. Institutional adoption is increasing, and regulatory clarity is growing. Hougan highlights that infrastructure, transparency, and more astute finance will propel the next stage of growth rather than hype. According to him, digital assets like Bitcoin are becoming a necessary component of a contemporary portfolio rather than just a fringe item. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Do you think we could see that in the future flowing into how strategies are being done on crypto itself, translating over to traditional markets?
Oh, absolutely. Crypto is sort of your window into the future. It is showing you what 24/7, 365 trading means. It means you can react instantaneously to events. But one thing that I think people need to realize is it doesn't repeal human nature. You see a lot of these big exaggerated moves, Paul, on the weekend when the markets are less liquid than they are during the week.
Right.
And that should be familiar maybe to traditional equity investors who are used to seeing exaggerated moves in after hours trading. As an investor, you should look at those moves skeptically. They don't necessarily reflect changing fundamentals in the space. For example, there's nothing that changed fundamentally about crypto this week. The government's still printing debt. The existing financial infrastructure is still extraordinarily slow and inefficient. What happened was the market entered its illiquid period on Sunday night, and there were some cascading liquidations. It's just a feature of this market. You have to be ready for it. I mean, you have to change your ecosystem. You need traders who are available to react 24/7. You need algorithms that are able to react 24/7. You have to understand liquidity and illiquidity periods. But there's no turning this back, right? The long-term future is 24/7, 365, global trading across all assets. That's what the world wants. That's what the world will get. Crypto is just giving you a glimpse into what that future means, the good parts and the bad parts, the release valve, and maybe the Sunday night illiquidity. And it's good to train up on that while crypto is still young. Yeah, there are probably two things to look out for. One is what I mentioned in this article, which is the SEC has cleared the way for a large number of crypto ETFs to launch. Right now, we just have Bitcoin and ETH. I suspect in a few months, we'll have ETFs on a dozen assets. In 6 months, we may have ETFs on 25 assets. So you're going to have this ETF exposure to a large number of assets. The other thing that's happening behind the scenes, maybe fewer headlines, is that national accounts are finally approving spot Bitcoin ETFs. So folks like Wells Fargo, Morgan Stanley, Merrill Lynch. So you have this second wave of growth that I think we're going to see in those major assets, just when the minor assets hit that first wave of growth. Both means more investment capital coming into the crypto market. You know, the World Bank says that institutional and professional investors control $100 trillion in assets. If you think they're going to end up 5% allocated to crypto, that's $5 trillion that needs to come into the market. That's actually bigger than the entire market cap of crypto. The market cap of crypto right now is just a shade under $4 trillion. So I think over the next 10 years, you're going to have multiple trillions of dollars of capital that needs to allocate to crypto. The ETFs have done a little bit. They've done exceptionally well, the fastest growing ETFs of all time. But there's still maybe just a few toes in the water, Paul, from where we're going to go. Yeah, I think of it sort of like the tortoise and the hare, Paul. The DAT companies are like the tortoises. They jump into the market, raise debt, and buy $100 million slugs, $200 million slugs, $500 million slugs. The ETFs are more like the hare, incrementally each day buying 10, 20, 30, 40. Which matters more? It depends on your time frame. Ultimately, the ETFs are going to be the bigger avenue. But these digital asset treasury companies can do step function purchases that really dictate the market. I think keeping that tortoise and hare analogy in mind will help people think about these two approaches. It's a bullish sign. It means that they're worried enough about stablecoins, which, remember, 2 years ago, you couldn't get anyone in a suit to take a stablecoin seriously. And now the Bank of England is worried enough that they're thinking of putting fundamental restrictions on the economic freedom of their citizens to access these things, because it might, pull money out of the banking sector that's taking advantage of them. It's an incredible sign of weakness. Ultimately, it won't stand. Walls can keep in water for a while, but it will find ways to spill out. I think it just shows you how powerful this stablecoin narrative is, that it has the Bank of England quaking in its boots. I mean, that is a big step from where we were a few years ago.
Hougan draws attention to something far more significant than just investment possibilities. People were forced to utilize the money that their government issued for the majority of history. The currency you used depended on where you lived. Bitcoin changed that by establishing a worldwide, non-governmental substitute. It ended the monopoly. This concept is furthered by stablecoins, which enable anyone, wherever they may be, to access more robust fiat currencies, like as the US dollar. The fact that central banks are attempting to restrict this freedom of choice just serves to highlight how potent it has grown. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
The reason Bitcoin over gold is you can store an infinite amount of wealth in no space. With Bitcoin, you can move it around at the speed of light. That's why I think Bitcoin is ultimately ascended, ultimately will be a bigger asset than even gold, which will remain bigger than silver, because it's better on those core monetary statistics. Or characteristics. From a short-term perspective, I don't know, silver is more exposed to economic trends than gold and Bitcoin. I'm more worried about economic growth than I am about rising interest in fiat hedges. Therefore, I'd lean more towards gold and specifically towards Bitcoin. But look, I think all of those hard assets, I think the tide is rising on all of them. I think investors are fed up with what's going on in fiat currency. You see a bid for gold, silver, Bitcoin, other metals. I think that is a rising tide across the board. The way I think about this portfolio for most investors is that this is your core. This is a market cap weighted portfolio. It owns assets in direct proportion to their size in the market. And that's your core. And then most people will want a satellite that lets them overweight. You may look at what Scaramucci is doing with the Avalanche Digital Asset Treasury Company and say, that's going to be hot. I want to overweight Avalanche. You may look at what's happening in Solana. Hougan says it's Solana season. I want to overweight Solana. We love that. But I think that index, which is like the S&P 500, can be your core, and then people can over and underweight from there. It's what I do with my own personal portfolio. I think a lot of people will as well. You know, I wrote another piece called Solana season. I think Q4 is setting up to be an exceptional period for Solana. You have the combination of three ingredients coming together. One, you have the expectation of a large number of Solana ETF launching. That means flows into those ETFs. There's the article. At the same time, you have these digital asset treasury companies run by some of the biggest names in finance, right? Kyle Samani of Multicoin, Dan Moorhead of Pantera. These are OGs of crypto launching Solana-specific strategies. That's more buying of Solana. And then at the third point, you just have this explosion of interest in stablecoins and tokenization. Some of that's benefited ETH. The other major beneficiary is Solana. You put all those three things together, it's one of the best setups for a crypto asset that I've seen in the last 5+ years. I think it could be, if they all come together, an extraordinary Q4 for Solana. That's right. We've been trapping people in their own geography and forcing them to have no choice in their currency. Bitcoin started to break that. You didn't need to be government-based. You could hold something that's independent of that. Stablecoins are another way. You don't need to be local currency. You could be in the dollar, which is the cleanest dirty shirt in the fiat currency world. From my perspective, more choice is better for investors. It's empowering for individuals. And these sort of last gasp efforts from people like the Bank of England shows you that the time is now, that they're really ascendant, that they're globally important. The thing for investors to look at it, 30,000 foot view, is each of those assets is up and to the right. They're telling you something, and they're telling it loudly. The thing that unites those stories, the best looking charts in finance, are all hard assets. They're all doing that. What they're telling you is there's rising concern about fiat debasement. That I think is going to accelerate. And pick your horse, Paul. but they're maybe all going to win at this derby.
Hougan goes into further detail about the direction of all of this in the end. He believes that significant institutional capital will enter the market when more cryptocurrency ETFs are approved. ETFs for Bitcoin and Ethereum are only the beginning. In the near future, there may be dozens of ETFs for other digital assets, and major banks like Morgan Stanley and Wells Fargo are finally beginning to provide access. Over the next 10 years, this might double or triple the size of the whole cryptocurrency market by releasing trillions of dollars from professional investors. Additionally, he notes that stablecoins, digital representations of conventional currency have grown so powerful that even central banks, such as the Bank of England, are increasingly wary of them. He contends that regulators' attempts to restrict access to stablecoins demonstrate how disruptive they have become to the banking industry. Hougan also thinks that because Bitcoin is more effective, portable, and infinite than gold, it will eventually overtake it as a store of value asset. However, as people lose faith in fiat currencies, he sees all hard assets, gold, silver, and Bitcoin, gaining power together. Hougan concludes by highlighting a straightforward approach for investors. Think of digital assets as an index fund like long-term core holding. His message is clear. Although cryptocurrency is still in its infancy, it is developing quickly, and learning about it today will give you a front-row seat to the global financial industry of the future. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.